Hey everyone, welcome to our next, is it a third slide, right? So here we are talking about the forex market structure, right? As I always say, it's good to first read this. It's one of my quotes, says protect your downside as a young entrepreneur by doing an analysis first before investing, right? So let's get straight to our work here. So in this slide we'll be talking about how the structure is built in the industry, the market structure itself of forex market, right? So here there's a nice diagram that we are supposed to know the linkage between smart money and dark money, right? That is connected by retail brokers, right? So it's very important for someone to know. But before we start, it's very important for someone to know about these four terms. I think I might need to zoom a little bit so that everyone sees here this diagram, because it's very important, right? So these four terms, I'm talking about this. So here we are talking about access, financing, liquidity, and education, right? So we need to know that in the industry nowadays, the access is now quite everyone is now able to access these things in their homes, wherever you are, right? Using softwares from brokers that are provided by brokers. And there's what we call financing. I think I've explained about financing 10. It helps brokers to go to credit facilities here, to investment banks, so that they get a loan. So these guys, they borrow these guys, they give money, retail brokers, so that they might give this, as I explained, at a higher percentage, right? Interest, maybe 3%, right? These guys, they end up going to these people, what we call dump money, maybe, and lend it at a 4.5, which means these people, they are making a profit of what? Of 4.5% minus 3, which is close to 1.5% per annum. So that's what we call financing term. But generally financing 10, that's how it is. I think I've explained. But in this diagram, one needs to know what's happening. There are four key important terms that you need to know. Access, everyone is able to access nowadays through softwares of brokers. And financing, right? Let me rub this so that everyone can see, don't get confused. And financing, right, which is a help to retail traders, right, where they get leverage, or where we get money so that we buy this contract difference for or assets, something, right? And liquidity. So liquidity, we are talking about exchange, where our orders are cleared, right? That's what we are explaining. And education, so the diagram will explain also in terms of education, where these people hire people which are called trading educators, so that they go to you and teach you crap, or what we call bullshit. You think now you now know how to trade, right? But the main reason why is these people hire these trading educators, so that they give you the information on how to trade, but though it's crap, it doesn't help you. They give you a false narrative to say you now know how to trade. They host seminars thinking that you now know how to trade. Then you end up throwing your money into retail brokers, sorry. So the main benefit is why these trading educators come to you and say you need to post your money, because these guys, they get money from volume, what you call volume and size. The more you deposit your money, the more they make money from commission spread. I think I've explained about it. That's what they are explaining here. management fees. These are hedge funds, right? If you put your money through a controlled company that manages your money over time, it charges you management fees. But spread and commission brokers, financing brokers, false narrative, these guys demand or losing, they want you to lose generally. So the diagram, you need to know one thing about the diagram here, that this diagram is split into two, but being connected by what we call brokers. They go to what we call to this side. This is the side that we are talking about. They go to this side. Brokers what we call these brokers, they go to this side for credit facilities. So this side is what we call smart money, because they do what you call calculated risk adjusted returns. They lend money so that they gain more money, right? But these guys, this side, what we call retail traders, is what we call dumb money, right? So dumb money is given a mandatory to deposit their money this side so that they lose money, right? You should be very careful this, right? That's it is. So the last part is where I think I've explained where your orders are cleared here. OTC, right? Where orders are cleared, it's monopolized, the price is controlled. But as a professional trader, you should know how to make profits over time, right? I think I've explained. So let's continue. Let's continue, right? It's very important stuff to know. So let's continue with our stuff. So one must remember that in this diagram there's conflict of interest. People are pushing, brokers are pushing you to deposit your money in the brokerage side, like I explained, right? So you should be very, very careful, right? So remember, you should understand the flow of order to an exchange markets. This side should understand what's happening, right? And also you should understand the conflict of interest in the industry. This industry is set up for you to fail. So don't be fooled by anyone, by trading educators that you need to deposit your money. Do an analysis, check, like I said, because everyone is pushing his own agenda to make money. Everyone is there in the industry to make money. So there's no one who comes and borrow you some money so that you make money, right? So the structure is like a pyramid. One thing that you need to know, like this is a pyramid that I'm talking about. It's like a pyramid, but everyone knows a pyramid structure, it means that someone at the bottom is there to suffer, while these guys at the top, they're making money. So you should be, it's believed that 90% of these people who are at this pyramid, 90% they lose money, while also most of the guys at the top, they make money. So what is your goal? Your goal is to say from this 100%, 90% they are losing, right? Your goal is to say from this 10%, you should be one of the 10% to win over time, right? But that's not our structure is a pyramid scheme. It's not a pyramid, but it's a pyramid like saying that people at the bottom, they are the one who are suffering, right? You should be very careful. So who are they? You and me. I'm a professional trader now, right? But I'm saying people who are doing retail trading, they are here. They should be very careful. Then these guys, they put their order, it goes to what we call forex brokers or retail ECNs. It's just brokers. These brokers, they get that money, they get those orders, they put it to this side to large participants such as investment banks and so forth. These guys, they go to FX dealers where your orders are cleared, right? So that's how the structure is, right? So the question is, one may ask, what is an order? Very important thing. An order is just the instruction to sell or buy. But this order can be what we call a pending order. We'll explain about this, but it's very important for me. A pending order or what we call an execution, immediate execution, right? So what is the difference? Very important stuff. Pending orders, this you are saying, if I want to buy or sell at this price, maybe at 1.25, but maybe the price right now is at 1.21, right? Please be careful. So we are saying you don't want to have a immediate execution of order. You're saying if it goes to this price, right? If it goes to this price, I want to buy, right? So it's not like an immediate execution. We are putting an order to say if it goes to this. So it's very important. Immediate execution, there's nothing to explain. It's just to say I want to buy right away. Very important, right? So remember, a retail trader, let me clear this so that we don't confuse each other. Sorry. So remember that a retail trader is not a hedge fund. From this pyramid, these guys, they are not a hedge fund managers or professional traders, right? So you should be very careful, be vigilant, right? These people who are called professional, they do what we call a performed control function, so that they protect other people's money, right? Who have invested through them, right? That's who are called these professionals. They take other people's money, but under a controlled function, not someone at the back of his bedroom is taking people's money, busy scamming people. It's not like that. It's not a professional trader. You can't say someone who is playing football at his back of the yard is now like Messi. It's not like that. So if someone claims to be one of the people who are professionals, go and do a double check through internet and say, this guy, is he really a professional trader? Because you can't be saying you're half pregnant. It's either you're pregnant or you're not. It's either you're a professional trader or you are not, right? So here it's a picture which shows that people are having an agreement. You can see this guy smiling, right? It's like brokers and you're putting orders. They are saying no, we'll do a job, and saying we'll put your orders to FX dealers, right? So what is a broker? The guy that you are getting yourself into is just a person who buys or sells goods or assets on behalf of others. So others is you. That's what we are saying in the market. It's you, retail traders. Alright. So entity, or it's just an entity, because nowadays you can't give someone, right? It's entities. Brokers are entities that facilitates the execution of your trades, right? You put your trade, you put your order, they facilitate that, right? They give you leverage, which can be a good thing or a bad thing. We'll explain about that. So order is the instruction to buy or sell a quantity of a product. I've explained. So the question is, what is a good broker? What can we say about brokers? A broker can be a good broker or a bad broker, right? So a good broker should be transparent, right? And should have low fees. In terms of spreads, commissions should be low. It shouldn't be wide. I've explained. Good platforms and software that are not complicated. Good support should be regulated by certain policies. No conflict of interest where they are sending you trading educators so that you put too much money. I've explained. You should have a leverage to a good broker, which should be not that big, because it might have its consequences, right? So remember that you need leverage, because to buy assets or currencies, the one that we are working, one needs to have an optimum amount to transact with big players. Like I said, maybe the asset costs 100,000. You as a retail trader, you can't find this 100,000, right? So they say deposit 1,000 so that they will give you plus 90, they will leverage this 90,000 to you, right? This 90,000. So a good broker should give you this, right? So at the same time, you don't want a bigger leverage, because it shows that broker doesn't lie with your interest, with your own benefit. Hence, all brokers should be trustworthy. And I always say, be very careful with these brokers. So what are the types or order books that we have, right? So we have two types, A book and B book. The question is, what is a B book? Let's talk about a B book. An A book. An A book is just a book that is major. So usually brokers, they've got what we call a order book, where they've buyers and sellers, right? People are placing orders here. Buyers are placing to say, I want to buy, and sellers, right? Like I have explained, right? So if maybe this guy, he says he's selling his stuff at $5, this guy is willing, is bidding, like I said, with $5. If this matches, that's why we say the order is filled. Your order is filled. You place a trade and the order is filled. You buy at a seller at $5. That's how it is, right? So that is an order book. It concerns buyers and sellers, right? Not the third one, participant, someone who's watching. So order book is a major liquidity providers, right? Market makers, people who are placing trades. It sends these orders. These orders, they are sent to FX dealers, big FX dealers like big banks. So a book, it's a ECN broker. So what we say, if it's an ECN broker, it only gains its revenue from commission, not spread. Be very careful. They don't put a spread. So every time you put a trade, right? Not spread, sorry, I'm using a mouse. Not spread. So every time you place a trade, they charge you a certain percentage, right? Why is it so? Because they are borrowing you money, so they should gain that amount. Like I told you, like I have explained about financing 10, right? So that's how a book broker works. There are examples you can research over the internet. What about the B book broker? Like an example of it's IC markets, right? B book broker, this one, these are in-house orders. So these are what I call market makers, people who are brokers that are betting against you. So they usually gain that amount from OTC gained. I think I've explained OTC gain. People who make money, OTC gain. So buyers or sellers orders to you, those orders from other clients in their code market makers, I've explained. So they also gain from commission, OTC gain, spreads, commission, right? You can put a commission every time it gets in a trade, they charge a certain percentage, right? So all these brokers offer a trading platforms, right? All of these brokers, whether it's an A book, B book, they give you a software so that you press a button. But you should be very careful. You should have a knowledge to say, I'm ready. So where you can place your orders, like I have said, you should have knowledge first. Not all brokers works for each other. Not all of brokers work in every country, right? You should do your own research mostly, but the platform that they use is MT4. I will show you about these softwares in later stages. So what are the recommended and rejected that we have? I think I've listed about few recommended broker. IC markets, the one that I say is a ECN, or what we call a broker. This one is because it's the one that I'm using currently here at UNICOASTER Trading Group. So I know what type of a book is it, right? An order book they use. So FTX, mostly if you check about this recommended, they are regulated, but these ones that we reject here are trading 2-1 what and so forth. They are not usually regulated. So if you lose your money, there's no way to claim it, right? Let's go to the next slide.